give us kind of like a 30,000 foot view of like what a private equity company is looking for in terms of like, hey, is this company all processed out? They have training manuals. Like, how valuable is that in the evaluation of a company?
Yeah. So there's one statement that I give folks every time as I'm giving them advice or guidance about starting the process of due diligence or looking at private equity money, right? And I tell them to think, hey, this is my business. My business is a machine. I understand how to steer my machine, to improve my machine, to transform my machine. And I understand how to manage my machine to a successful economic outcome. And here is the data that proves it. That at its heart is what you are there to do. There are three big things that I think that every roofing owner needs to know that private equity is going to care a lot about. And the first of those that I don't hear talked about a lot are compound annual growth rate. So your compound annual growth rate is how much am I growing in market year over year for my business? What it's going to suggest to me as an outside investor is how viable is your business model long-term, right? i.e., hey, you've been in Indianapolis for 8 years. In year one, you grew 100%. Year 2, you grew 70, then 40, then 15, then 10. Some of that's going to be scale, right? But if I think that your growth is slowing beyond just your ability to scale up in total revenue, while I'm watching similar things happening in other markets, it might point to a flaw in your business model, and it might give me a moment to pause. The second big thing that I tell every business owner to think about is EBITDA. I mean, EBITDA is really like 1A, right? You want your EBITDA margin to be high, as high as possible. And that looks like generally, right, like reducing your overhead expenditures. That looks like maximizing margin on your jobs, on your roles. I'll tell you what, as an outside investor is going to be 500 times more interested in a $8 million roofer at 40% EBITDA than a $20 million roofer at 4% EBITDA. They're not going to care about your top line revenue if you're not making money.
True.
They don't care. And they're particularly not going to care if a lot of that selling is still happening amongst, hey, me and my president of sales and our good buddy from college, right? They're not buying you, they're buying your business. So they're going to want to see that there's effective sell-through that's happening at every layer of that company. And the last thing they're going to look at to that end is revenue per full-time employee. They're going to want to make sure that are you sized and staffed appropriately? They're going to unpack what you're paying individuals because, i.e., if you're underpaying your staff and your team today, they're going to arbitrage you on that to say, well, I'm not going to give you this much because I'm going to have to raise the comp for these 7 people because you're not paying them enough, right? So we got to bring them in line with market. Or they're going to say, well, yeah, I'm probably not going to give you this much because I'm sure Susan's doing culture and finance and accounting and operations and all these wonderful things, and I'm sure it's 8 jobs, but you've got to listed as office and culture manager on this. And those folks don't tend to make $150,000, right? So your comp plans are out of balance and out of line. So comp reviews, I think, are important, and kind of right-sizing your roles are pretty critically important, but it's all going to be about efficiency. Business is one in the margins, right? So am I cultivating my sales and marketing funnel as effectively as I can? Do I have any kind of recurring revenue model, right? If I were a roofer, the first thing I would do today is build a service contract. $500 a year, that will cover any repair up to $1,000. It guarantees 2 free inspections during the course of the year. Really, I'm just putting you back at the top of my sales funnel. So, right, whatever. But it's what it is from the investor side is it's recurring, it's free money. It's recurring revenue. So if I'm a $10 million roofer and I can sell 30% of my deals on a $500 a year service contract that are going to pump all of that money back in the sales funnel, like that is really attractive to me, right? That's a business that can make money no matter what, even if there aren't storms.